Hey traders, midweek checkup on the price action. There is some confusion today, even from people who know what they're doing. So I figured I'd give us a touching base in the middle of the week to update on the video I did Monday night before the market opened this week. So just to remind you what the concept was for this week, that we've had stabilization from 3 weeks ago. It happened 2 weeks in a row. Then 2 weeks ago, we had a small rally. Then last week, we had a big rally. So we stabilized and we made progress. And Monday night's goal for this week, my goal that I suggested we should have for this week, was to drop, but hold on to as much of that progress as possible. That was the goal. Hold on to as much as that progress as possible. Keep that in mind as I continue here. So what happened today? We opened up, and then we fought for it for a little bit. We had mixed markets for a little bit. The small caps tried to hold on, and then everything gave up. We're looking at the SPX. And the sell-off was not violent, but it was persistent. It was like complete selling off. People attributed it to Powell. I disagree. Rates fell hard today, like you don't see often. If you look at all the rates, they fell hard. The price of bonds rallied. That's not usually fear of Fed hikes. Maybe it's something else, political realm that I don't keep up with. Regardless, let's ignore the news and focus on the price action to see if we can use that to forecast where we're going to find support. All right, so again, it's Wednesday. The market's closed down 1.5%, give or take. The VIX rallied 5%, so it's not an explosion, but it was way too low, and I told you that. All right, so the day was bad. How bad was it? Let's look left. It's falling into, it's just above a gap from the 11th. And that zone is the middle of that zone. And so this is hardly tough. Has been consolidated. It's been fought over. Extremely happy, extremely unsatisfied, extremely happy, and then way too happy. And then here we are back to this weak point. There's nothing recent to help the bulls find stabilization. They lost every support level. This will be one. This whole zone is one. Okay, so we just rallied 7% in the SPX with no rest. I think the IWM was more like 11. So we can afford a few red ticks. Let me show you something sobering. This is the daily chart. This one red tick. We had that stabilization. We had the progress. The goal was to maintain as much of that progress as possible. We've had one giant red tick compared to a nice rally. This is normal so far. We definitely don't want to lose this, but that's 2 conversations away from here. Okay, so let me show you the picture from the small caps, which you probably recognize. I'll put my drawings on there to see if you can recognize it. This was there this Monday night before the week started. My goal again was, we've made so much progress. This was 11% rally. We can afford to give back some. This technical target could be 180, and there would be a 3% drop, maybe a little bit more from the high, and that would be normal. It wouldn't even be half of what we rallied. It would just be the fact that we ran into some pretty significant levels from far back, and it's okay to stumble, come back down. They have been buying dips. Look, every dip has been bought in an ascending channel. Let's assume that this continues and not panic from one day. So this was one day that brought us back to some sort of, look at this mess here. So this should be primary support tomorrow. If we come down to here, we should be able to find footing. And if we do, let me go to a daily here. Does it get too messy with the lines? Okay, so check this out. This is the daily chart on the IWM. Had we not stopped here today, the IWM, a basket of 2,000 stocks, would be in breakout. That's not normal. Why should we break out now? We don't have any fewer problems as we did before. I heard some nonsense today that some people are expecting that the Fed should stop. Are we deaf? The guy has been saying for 2 months, I'm going to be raising for a long time, just at a slower pace. I think he said longer, farther, or something like higher and longer. So he's going to continue raising for a long time. That's what he literally said. and this market keeps imagining he's saying something different. It's like that movie Dumb and Dumber. It's funny. Anyway, so the IWM above here would have had open air, and that's just not normal. The normal thing to do is to drop. However much you hold of it, the better. You come back and you take out these levels. And if you do, you're going to end up taking this out eventually, because the measured move off of this breakout is higher than this. So if they do this, they come back, they break out from here, they stumble here, they come back, and they can test how strong is the bear here. And if the bear loses this, it's game over for the sellers. The bulls have bottomed after a year and change. Somebody asked me, is this the end of, are we in a bull market now? That was in the morning. I bet you they would not have asked me that if they waited 3 hours. Are we in a bull market now? I don't even know how to answer that. Technically, I think what is it? Minus 20% is a, I don't know what Wall Street calls it. 10% is a correction. We have fallen from top to bottom more than 20%, almost 30%. Some indices definitely fell 30%. So we've regained a lot of it. So maybe we're just bottoming in a trough, which is what we should do. Basket of 2,000 stocks. Let's go to weekly. So COVID recovered, went to the moon like crazy fools, and then we corrected for a year. We went sideways for a few months, part of that year. And now maybe we're bottoming. So these are the lines we were just talking about, these right there. You can see on a weekly basis. Had we continued straight up today, we would have been in open air. Deal with this. If we take this out, I doubt this will hold. And then this is a bigger problem to deal with. So this is normal price action. Now, here's the big warning, which I've been carrying for a long time. I'm optimistic without a new shoe to drop. But I'm also confident that the media can manufacture these experts. It's a rigged game to a degree. So they can do whatever the hell they want because we're idiots. The proverbial we. We're sheep. We hear it, oh my God, it must be true. And then if for whatever reason, regardless of the headline, good or bad, if we lose this, expect disasters. Like I would expect a big drop from there. Maybe another 15%. And then Apple will be 2 digits, most likely. So I'm just letting you know that that scenario exists. I'm not blind. I know it's there. But if we don't have a new shoe to drop, if they don't make up a new problem, if they don't create a new mess somewhere in the world on purpose or not, these politicians are incredibly not nice. Well, that could happen. My assumption is if the earnings reports next week come out tame, like if Amazon doesn't tell me that their sales are done, if Amazon tells me their sales are down 20-30%, yeah, buckle up, it's gonna get bumpy. But if Amazon and Google and Microsoft and Walmart keep telling me the same story, okay, it's less hot than before, but it's not a disaster yet, then I'm still confident that Powell has not broken the economy yet. He's damaged it here and there. He's caused a few problems for a certain set of segments of the economy, but he hasn't demolished it. Okay, so this is just a midweek update. There's a lot of confusion, and hopefully you've had time to watch it. Some people choose not to. I think I use it. It's a tool that everybody should be ready for the what's coming up or the scenarios that are available. This is one tick. It could be more serious, but until I see more evidence of that, I'll just treat it as, okay, we're falling into support. So let's look for that support tomorrow. That's it. So this is the IWM. Target 1 is here. Target 2 is here. And if we come here, I think we can stabilize, come back and take this out.